Hello, my name is Jason McCormick. I'm a student in the Accounting 350 Ethics course, the summer of 2015. Very much have enjoyed this class and the materials that we've covered, the discussions that have been posted on the D2L. Gained a lot from this program, and I appreciate the instructor for how she has compiled this program and responded to our questions and directed us in our learning. One of the assignments that we have been given is to review a movie and provide a response or a synopsis of that movie. The movie that I chose was The Smartest Guys in the Room. It has to deal with the collapse of Enron and the fraud associated with that organization. It comes from a book that was written by Bethany McLean and Peter Accnt, from reporters from Fortune magazine. The movie was actually directed by Alex Gabney. And I was quite surprised in all of the things that I learned from the movie. First, it seemed to me that from the very beginning that there was a culture, a disposition to do fraudulent acts. This begins with Ken Lay in the movie, where prior to really getting involved in Enron in the sense of Jeffrey Skilling and Andy Fastow, he was working with some individuals, some traders in the New York area who performed some fraudulent endeavors, and it was brought to his attention, and he otherwise said, yeah, this is exactly what we wanted them to do. They just didn't get it done right. And so they left the organization. They were released, and so on and so forth. He turns around and hires Jeffrey Skilling, and Jeff comes in with the disposition or the requirement that in order to be hired, the organization has to adopt an accounting philosophy called mark-to-market. It's a recognition of revenues, future revenues, in fact, and being able to pull future revenues into the current period. And it created a mechanism whereby in the future, Enron could otherwise manipulate what was being reported for revenues. The problem with Enron begins at the very beginning, before they actually begin with the name of Enron. They are purchased. The company is purchasing an oil and gas company out of the Houston area, and they overbought or overpaid for that business. And in order to record that in a manner that met Wall Street's expectations and requirements for bond covenants, various things of that nature, pressures that were going on, they had to move that recording of that transaction off the balance sheet. And so they created the SPEs, and that begins the whole process for the fraud in Enron, and it just continues as a whole culture in which they continue to expand upon these special purpose enterprises and record much of their liabilities off the balance sheet. That leads to Andy Fastow being involved and getting caught up in all of the wealth that's going on, and being in a conflict of interest where he's in a fiduciary capacity as the CFO for Enron, but he's also the director of these programs and doing business between the two of them. And soon goes over the line with regards to generally accepted accounting principles. There's also the practice within the organization that 20% of all employees need to be removed in any review because they're just underperformers. And so it creates tremendous pressure for outperforming your peers at whatever the cost in order to purchase those things that need to be purchased, or sale or trade, or just whatever it may be. And the greed just continues to escalate. It's amazing in the end how it seemed like everybody was prepared for this. Everyone at the top, whether it's Jeffrey Skilling or Andy Fastow, knew that at some point they were going to be caught. And when it becomes very close to that time, they begin selling off their shares, preparing themselves legally, moving in that direction. I do commend the individuals that began reporting against Enron, whether it be reporters or analysts or employees in the organization who began to question what was going on and why. In the end, it was very tragic what happened in this organization. I do feel that much of this has to deal with the board of directors that were there, the other professionals such as Arthur Anderson and the analysts and the bankers who were just so caught up in making a profit that they compromised their ethical commitments and standards to make that happen. And it reminds me of the importance, whether I'm in a big company or a small company, that I need to guard against those things, that they can so easily enter my life and in my professional practice as a manager and a financial person. And I appreciated listening or watching the show and learning how it impacted human lives and how I need to avoid it. Thank you.